And there you have it. The markets are officially closed on this Wednesday, November 19th. Welcome, investors and traders, and welcome especially to the option traders who are joining us for the first time. This market continues to be a prime market for option traders because of the volatility and also because of the technical signals. We'll get into some of that. But first, let's bring on Nod from our Nod live feed to go over some of the information that's being released. We have a lot of action here today, Nod, with Nvidia about to release their earnings any second now. We'll maybe keep an eye on that chart. What do you have on your end?
You've got it, AJ. Thank you so much. And yes, happy Wednesday, all. We are so grateful for you being here. Life is busy, but we're just blessed to have you here and joining us during these busy times. Listen, the government finally opened up and we're starting to get our information back, but it's really trickling in. And some of the stuff that they're sharing with us is delayed, and it doesn't really matter. But what does matter was yesterday we got impending layoffs from the Cleveland Fed saying that they spiked to 39,000 in October. And the only higher level in October was in 2008 and 2009. So we'll take a look at that. But AJ, you're right. I am looking at one of my screens waiting for Nvidia to come out. Before it does or when it does, we can talk about the concentration because we've spoken about that before, AJ. And just so you know, Nvidia is held by hundreds of ETFs. In fact, 717 different ETFs and over 750 different funds have exposure to Nvidia. So again, whether or not you want to agree or disagree, I believe that is pretty high concentration. Again, while we wait for that to come out, AJ, is there something you can show us on the chart going in? I know we're not going to try and pin it down during when they come out, but what do you have to say about Nvidia?
Well, we got right out of the gate here, we've got a massive bearish engulfing candle showing up. Now, right before the close, you could see that we had this pump in the price action, and the volume increased right up until the close. And you could see now how we're breaking out below that moving average. Now, keep in mind, this is a 1 minute interval on my charts here. So with the majority of the folks that are going to be coming in long on the earnings announcement, mainly because the large majority of the time companies will beat their earnings estimates because they more or less lowball the estimates from the get-go. So it's going to be very interesting to see how the option traders play this one, because right now, as we're waiting for the earnings, if you take a look at the option volatility in the options that only have 2 days left, we've got 125% volatility in the 2-day options right there. And so there's going to be some, I'll have to say, some gamma trades going into tomorrow, especially on the opening. But Nod, you have your news feed ready to go. So as soon as you see that, you're going to get that most likely before they even post it on a lot of these trading platforms. So we'll have to keep an eye on that one for sure. You know, Nod, we had a couple of our targets have already hit from the weekly market report. If I can get into that, and then we'll hop back to you with your news.
Yeah, that's great. Please, lots to cover.
Yeah, DIA, my downside target is down here because this is a role reversal support level in this area. This is all support. So we're coming in very, very close to that target hit. However, if you look at the daily candle from today, it's hard to make out, but I know the color of today's candle is green because I've color-coded that to my volume bar down below. So if you see that green, then the body of the candle is green. That is, believe it or not, the smallest bullish harami candle I've seen in years, but it's still a bullish harami candle. So I think we're going to get a bounce here over the next couple of days. We've already taken a big hit in the market over the last 5 trading days. But I think we could get a little bit of a bounce, possibly up to fill the gap from Monday here, where the low from Monday is going to be the gap fill. So I think we could see a little bit of a rally. Again, a lot of this is going to depend on what's happening with Nvidia. But the other news is that IWM has hit the downside target. And you could see, it's hard to see, it's in the middle of all these candles here, but we hit the downside target at 234.40, and we have a pivot on IWM. Now, this carries the least amount of weight in our analysis because those are the small caps. However, we do have a higher low, higher high here, which is the pivot. And if you look down below, as I magnify what we have down here with the with the CCI. We're about to cross with a buy signal right there, and going to the Qs, which is going to be very much tech heavy here.
Right.
Yeah, we came within pennies here. Did you get anything from Nvidia? I don't know. I know you're chomping at the bit to get that out.
You're good, man. I'll keep going. You're crushing it.
Yeah, Eric in the chat waiting on Nvidia like the rest of the world, right? Eric, you love that volatility. All right, so we got a pivot on the Q, so I think we could see a little bit of a rally there. But I'm going to hop right to the VIX because we did hit that upside target yesterday on the VIX that I put out at $25. That was a long stretch, but we obviously hit that. And now that the VIX has hit the upside target, take a look at today's candle. Remember, we were talking about Harami candles. Well, that is a bearish Harami, which is doubling up as a hanging man. A hanging man candle is a small body candle that's found at the end of an upward leg that has a long shadow underneath it. So when you see that at the end of the upward leg, that generally results in downside pressure about 80% of the time after that candle shows up. So if the VIX is dropping, remember it's inversely related to S&P, then I would expect the S&P to go up over the next couple of days. Again, they're inversely related there. So yeah, what else you have on your side with regard to the news?
No, that's great. So AJ, a few weeks, I want to show you this first chart here. A few weeks ago, we had our lending guru, Tim Lindsay, on. We talked about affordability for housing. Right now, this chart says now being said, Americans need to earn 70% more than they did just 6 years ago to afford just a medium price home. So the U.S. housing market has reached the most unaffordable level in history. So AJ, with this in mind, I want to do a two-parter. Can you please look at the 10-year, which does actually drive the rates that people get on their mortgages? And then let's talk about the largest publicly held home builder in D.R. Horton, ticker DHI, please.
No, we don't have to worry about interest rates. They're coming out with 50-year mortgages. Come
right,
on,
yeah, and a 15-year loan on my car. Perfect.
I think it's 12 to 15, but holy mackerel, by the time you pay off the loan in your car, it's going to be ready for the junkyard after that. I mean, you're going to have
200 grand for a Honda. Yeah, thanks.
And 200,000 miles on it. Now, I've been pinging Elon Musk on X. He obviously is not seeing, but eventually someone's going to repost what I'm putting with Elon's name attached. I'm waiting for them to break into the hybrid market. Now, I know they're all about EVs, and we could talk about Tesla all day long, but wouldn't it be amazing if he could come out with a hybrid that gets you 200 miles per gallon? He'll blow that market right up.
Yeah, who wouldn't buy that? That'd be great.
I mean, GM and Ford, they tried the hybrids with even the Ford Lightning, and then that they're failing miserably. I mean, you go onto a dealership lot and they're loaded with all these EVs that aren't selling. But I think Elon Musk could break through and be the pioneer with the new generation of hybrids. I'm waiting for that. But anyway, going back to the 10-year, you can see that we've got a pivot here yesterday, lower high, lower low. So I think the yield is going to drop a little bit. Now, I can't forecast what the Fed's going to say or what the bond market is going to do. I can only read the technicals. So with the 10-year looking more bearish than bullish, we have a position in TLT. I'll throw this one out there because TLT is going to be trading inversely to the yield. So if I'm looking for a drop in the yields based on the 10-year, this is the 20-year bond. So the bonds will tend to rally. And I still have an upside target on TLT at $90.67. So again, for the option traders, I can't tell you what to do there, but there's plenty of option choices that you could make to get into a trade like that. But yeah, I think that the real estate market, especially in Florida, is going to boom in the Miami area as people flee New York and try to get away from the communists up there. But I know not hates when I talk politics, but you have to throw that in, folks. Whether you agree with my beliefs or not, you got to pay attention to the politics because ultimately it's going to affect the market in one way, shape, or form, particularly the real estate market right now, and possibly even interest rates as the demand increases for real estate. We'll have to see what the banks are doing to make it more appealing to the buyers. But yeah, that's what I have. TLT, I'm still bullish on that one short term, not super bullish, but still bullish to up to 90. So you got about another 1.5%, almost 2% to the upside there.
No, I appreciate it. Listen, I don't sleep a lot. I got a little bit creative with this one, but if I could pull up this second chart here, we like to familiarize ourselves with events so it makes more sense. So here's a fun one, AJ. This is a chart of Netscape, which our younger viewers won't know what that is or have heard of it because it's gone. So that should tell you something with it being gone. And then ChatGPT. So it's a 740-day chart of both, and they're eerily similar. And I bring this up because as and when Netscape went, so did the market. Well, the same can be said with this rapidly large, incestuous AI group, which includes Nvidia, which we talked about is held in 700 different funds. So, AJ, can you please do a recap of the amount of companies that are above the 50 and 100-day averages? Because I think that's going to be important for when we do get a correction in Nvidia, because those that are still hanging on, they're going to not have a lot of life left in them if and when there's a downtrend.
Right. Well, I'm going to be talking about this for many weeks and into the future, because this is, in my opinion, one of the more important, not necessarily the most important, but leading indicator, but I think one of the more important leading indicators, because it's telling us what the percentage of S&P stocks, what they're doing. Are they above the 50 period moving average? Are they below the 50? And as of today, it's hard to see that little number off to the right, but that's telling us that there's just about 35% of S&P stocks are above the 50 period moving average, which means 65%, a little bit less than 65% of the stocks are now below the 50 period moving average. And when you change that ticker symbol up at the top, I'm going to show you something. This is very interesting. You could change that. I'll read it out to everyone if you want to copy this on your trading platform. It's $ SPX, the letter A, the number 50, and then the letter R. Now, if I switch 50 to 100, what that's telling me now is the number of stocks that are trading above the 100 period moving average, which is a more significant moving average. And look at that. We've got 38, only about 38, almost 39% of the stocks above the 50, the 100. So that means you're closer to 61% of the stocks are below. And if I magnify that even more, check that out. We got a bearish engulfing. You could actually use technical analysis on this index, just like you would any other stock. And for weeks now, I've been talking about the 50% level breaking. And when you look at the 100, the 100-day period moving average here, you could see that the 50% level, which is a green dotted line, is now acting as resistance. And I've said this over and over again. I think that we're going to duplicate this downturn that we saw back in February, March, and into the beginning of April. And right now, it looks like that is actually happening. So if you're a trader, again, if a real trader doesn't care which way the markets are going, as long as the markets are moving, as long as they're moving, because you could take a short position by buying puts. You just take, in essence, you're taking a long position in a bearish instrument, but you can make money up, down, and sideways if you're doing it correctly. Now, what this would do for investors, Nod, and you know this because you deal with a lot of investors, this will more or less stress out the buy and hold investor who's sitting there twiddling their thumbs, maybe biting their nails, trying to figure out, what do I do with my long positions? Well, number one, I would protect your long positions and make sure the long positions don't turn out to be catastrophic hits in your account. You could do that by maybe collaring the position using options, maybe buying protective puts, maybe just using stop loss orders. But there's a lot going on here. Now, if I do one more, and then we're going to do a Nvidia check here, keep an eye on that, Nod. But if I take this number and put 200 in there, look at this. This is a big deal. There's roughly 49% of the S&P stocks are now down below the 200 period moving average. So there's 51% above, 49%. And it's been a very long time since we broke out below that 200 period moving average as a whole. But you also have to understand that what we're looking at here in Nvidia and some of the other mega cap stocks like Microsoft and maybe even Google, they're weighting the S&P with just a handful of stocks. But if you put out an equal weight index, you're going to see a much, much different picture. So again, I think that the markets are in jeopardy of a bigger downturn. But like I said earlier on in the show here, I think we're going to see a little bit of a bounce, just a little bit of a bounce. Then the next pivot lower could bring us to another ABCD, with D being lower than the previous pivot at B. We'll talk more about that tomorrow on the weekly market report when that goes out after the close tomorrow. So what do you got, Nvidia there? What do you see? Not anything?
No, it says 30 seconds, but Palo Alto did a double beat, so that's interesting for them. While we wait, I'm sticking to my macro a little bit here, and I want to pull up a chart here. I have a chart showing the impending for the 1929. We'll call it the glamour bubble, AJ, overlaid with today's. I'll call it the disruptor bubble. My focus here is volatility. Now, you already covered the VIX a bit, because the VIX, flatlined from the mid to low teens forever, and now the VIX is back firmly into the mid to low 20s. So with that in mind, where is volatility going to come into play? Now, obviously, there's an inverse relationship with the S&P and the VIX, but it's pretty correlated with safe havens like the US dollar. So can you look at the DXY and maybe UUP, because that's something that our members can trade?
Well, if I could, I just want to look at the VIX
Sure.
instead of the VXY, because I have my targets already in. Now, this is going to seem a little extreme for many of our newer viewers who haven't checked this out yet, but we hit that upside target, like I mentioned earlier today, at 25. However, if we take a step back and look at the weekly on the VIX, you're going to see that I have an upside target way the heck up here at 38.85. Now, we are already forming on the VIX, on the weekly, we're forming a rounding bottom, which is very bullish. It's a bullish indication, also known as a saucer bottom. So now we're starting to hit my upside targets. But the reason I have this level up here at 36.85, is that there is a gap, an open gap up there. So 100% of the gaps on the VIX fill. So I will give everyone here once again on a recorded show on YouTube, I will give you a guarantee that will fill. In other words, the VIX will get up to those levels eventually. I just can't tell you when. Now, if we're looking at that, you want to trade UUP. Let's say you want to trade the dollar. UUP is a very inexpensive way to get long the dollar, and the dollar is breaking out on this instrument here. This is the ETF for the bullish dollar. So what does that mean? Well, it means that there are currency traders getting in on the bullish side. But if you look to the left on the dollar, there is some major resistance up here. I'll even draw that line. So if you're thinking about buying this one anywhere around the $28 level, you're not going to have much room to the upside before you hit resistance up there around 28.64. Now, once UUP hits that resistance, you could, I'm telling you as a trader, you could get out of that and take a new long position in UDN, which is the bearish dollar.
And we've traded that before.
This is a great way to learn how to trade, because if you look at the price axis off to the right here, it doesn't move in large numbers like you're going to see with Google or, Alphabet Inc. I keep calling it Google. I probably always will. But you see that, even the big moves, you're only talking maybe 20 cents. So it's not going to hurt you, especially if you're using stop loss orders. So for those who are looking to trade and you want to trade and get your consistency down with tickers and also with your trading signals, I would say try trading the dollar instruments both up and down, UDN being the bearish dollar, UUP being the upside. We've got, I want to do a quick plug because, while we're trying to figure out how to use these charts,
sure,
we've got Andrew Faldi in our group. He's our lead consultant, more or less, or educator when it comes to Bionic trading. And what's Bionic trade? I got to put this out there. Let me just show you what I'm talking about here. The Bionic trader is Andrew giving a crash course to show people how to set up the bots. What's a bot? Well, the bot's basically going to trade for you. And you don't have to learn how to code. You don't have to do anything. It's basically point and click. And if I scroll down here, if Nod's going to put the link in the chat here below so you can go and look at this page. But I'm also going to put the link to this offering here in the description box below the recording. And this is what you're going to walk away with. You have a repeatable process. So the computer is going to constantly show you trade candidates, and it's more or less taking the reins from you so you could trade without all that stress. And so we have, it's a crash course now. So there are 4 different sessions that are going to take place, and these are recorded. So you don't have to worry about plugging into that exact time. And then you got the bonus tracker on top of this, and you got a template pack that comes with all of that. I'm just throwing that out there because I think this is one of the best investments out there if you're looking to more or less monetize the technology. That's what that's all about. You want to monetize the technology and let the computer do the work for you while you're still out there managing risk, and you don't have to worry too much about that. So let me get rid of that. And we're still waiting for, I think
I was just gonna say, so speaking of monetizing, Nvidia's out there. So earnings per share was $1.30, which was an expectation of $1.25, and revenue was
up. Yeah.
Revenue was 57 billion, beating 55. So
all right, now watch this. Watch this. The next candle, after this candle, you got to give it another 30 seconds here. You're going to start to see them sell into this. See, right now, the institutions are bidding this up. This is why you don't want to trade after hours. Okay, so they're bidding the market up right now, and I believe they're going to sell right into that on the opening. So in other words, the stock is up about $7, going on $8 higher on fairly light volume. You look down below, there's only a couple of volume bars. That's the institutions getting in, pushing that up. But you're going to see as soon as this candle goes away, it's most likely going to turn red. Can't guarantee that, but you see that long shadow on top of that candle? It's starting to see some selling pressure coming in the after hours. Now watch, I would not be surprised at all to see that candle pull right back and form another high or long shadow. You're going to see these long shadows start showing up on that. So we're going to keep track of that right up until the end of this program. So you can see, keep note, it's trading 195 right now. When we come back to that, I think you're going to see some red candles showing up on that one, maybe even the next couple of seconds. All right, now we got the chat box really going here.
Yeah, we're lighting up. And I was going to ask you to look at gold and silver, but let's cover some tickers for our members, please. Tom would love you to cover FOUR, FOUR, please.
FOUR. I don't know if I ever have FOUR. Okay.
Yes, please.
Number 4, FOUR. Now we're going to be doing a lot of this at 6 o'clock tonight because we have the rapid fire session. Now this stock is trying very hard to find support, and it hasn't done that. So I got to take a step back, look at the weekly. This stock still has some downside down here, all the way, believe it or not, down to $60. So you got to watch that one. The weekly chart is showing more bearishness than bullishness because you can see that this week we have a lower high and a lower low. Can you see that from last week? So while we did not get an upside pivot on that last week, we are getting a downside pivot compared to last week. So I'd be really careful of that one. I would have to wait for that one to get into a support level and see a bounce before I put an upside target on that one. But right now, I mean, if it was my account, I wouldn't be trading that. Not yet, at least till the pivot shows up. Yeah.
Thank you. All right, Alex would like ESTA, ESTA for Alex, please.
ESTA for Alex. Yeah, now this one is interesting because you got this green candle today, but not a big volume bar there. This one, I would say you're going to, I very rarely do this on live recording, but I'm going to do it. I think you got a little bit more upside potential on that. Then I think this one's going to see the pullback to this moving average because you got this super wide divergence from that moving average. That's called the rubber band effect. And when you look at that, you could think of Bollinger Bands, right? Bollinger Bands measure more or less the divergence from the mean. And then John Bollinger, the way he developed as is the trade on the stock back to the mean. So it's mean reversion. It's a mean reversion strategy. And if you look at this one on the weekly chart, you can see super wide divergence. In 3 years, that stock has not seen a wider divergence from that moving average than what you're seeing right now. So I think I'm being extremely conservative by putting a two-parter with the weight being more to the downside on that one for sure.
Well,
Yeah.
I prefer when you're conservative, so thank you very much. But our friend Arturo would like IRM, please.
IRM. Let's take a look at that for a tour. IRM. Yeah, I want to, now that one looks more bullish on the weekly, but I got to go back to the daily. Now, yeah, that's more bullish than bearish. See that long shadow? That's actually the opposite of what we were looking at with Nvidia when I was showing you the daily charts. All right, and so I think this one could start to rally up. And you just got to be really careful that if you're going to do that, you got to put your stop somewhere below that low. I'll go out there and I'll put a upside target. It doesn't look like much on that one, but I think around I'll put 92 to get rid of those pennies. So you've got about $5, a little bit more than $5 to the upside. And the way I would I can only tell you the way I would trade that one.
Right.
I would wait for a drop in volume down here before I buy any calls, but I would probably go out maybe to February or March. I would go out to March here, and I'd be buying these $100 calls for around 2.5. That's how I would play it. Now, if you're brand new to options, you have to understand that the option market, you got to know what you're doing with options. But when you're buying an option, you're buying a mini version of the stock, more or less,
Right.
if you're buying calls. So what I would do is I would just scale into that, and I would not get crazy and try to buy that one with any great volume. Let's just take another look at Nvidia. Let's see if we got any red candles showing up on that. I have a feeling there are. And there we go. See, look at that. Isn't that beautiful?
What do you know?
I love when that happens on a live broadcast. Remember, we left Nvidia when that was happening and the long shadow was showing up. And I told all of you, go back and listen to a recording, that will probably see some selling coming into it. So Nvidia has now dropped $5 or $4.50 from these highs. And I think they're going to try to push it up one more time before the opening tomorrow. And then watch what's going to happen. I think they're going to sell right into it as the funds start to adjust and maybe even do some hedging. So it's going to be a very, very interesting day tomorrow, to say the least. Now, with 2.5 minutes to go, man, we got a lot to put in 30 minutes, but I want to take any questions or maybe one more ticker before we wrap things up here. What do you have?
No, that's perfect. So Frankie's asking for PSLV, and can you just dovetail that into just a recap on gold and silver after you do PSLV, please?
Yeah, okay. We'll do the wrap on this one. Now, I will tell everyone, yesterday on this pivot here, I bought back into 100% of my PSLV because I'm rolling out of SLV, which is more or less paper silver, and I'm getting into PSLV, which is a closed-end silver fund that has all the ounces of silver documented and in safekeeping by the Royal Mint in Canada. And so each one of those bars are marked, documented, and made public. So I feel a lot safer. Now, one other thing I want to point out about PSLV before I go to SLV, this looks very much like a cup and handle here, with the completion of the handle would be up here around 18. Now, if PSLV breaks out over 18, what you do is you take the depth of the cup here and then you attach it to the breakout point. So that breakout point being around 18, the depth of the cup is around $2.50. So once PSLV breaks out over 18, I would put a conservative upside target on that right around $20.50 to the upside. So I'm all loaded up on PSLV. SLV also looks like a cup and handle. It hit my target last week here. But like I said, the cup is found here. See the cup? And the handle is a sell-off from the brim of the cup with a pivot higher. So SLV still has some potential to get up there around $49. But the thing is, the depth of the cup here on SLV is a little bit deeper than what we saw in PSLV, right? So the depth of the cup is around $6 here, almost $7. So if SLV breaks out of 49, you're going up to $56 on the upside. And I love silver. I think the shortage is real. I think they're covering that up. They're keeping it out of the headlines. I'll do my best to bring it back into the top headlines through Zero Hedge on a Monday. Maybe I'll write about that again, that people are falling back on their heels, missing out on what I believe is going to be one of the greatest opportunities on the long side. So that's it. We didn't run out of ticker symbols. We just ran out of time. And I want to thank each and every one of you for joining us. Make sure you catch our weekly market report that goes out after the close tomorrow. And if I don't talk to you after that, you have a great and very happy weekend with your families. And we'll talk to you soon. Thanks, Nod. Talk to you later. Bye-bye.